Back, my friends, to the show that never ends. Here we go. Sorry
The
about that.
show goes on. Do you guys see this thing that Robert sent? I just sent it to the production group.
No.
No.
Is our link up? All right, I'll retweet it real quick. Retweet.
Here we go.
It's from my phone. Hang on a sec. Take a look at it. Pretty funny.
OpenAI. To partner with OpenAI.
Partners with OpenAI to fund OpenAI. That's where we're at. All right, hang on one sec. Let's get this done and get this show on the road, boys.
Going to YouTube.
Bob, are we is it next stop Goblin Town for crude here or what?
I don't know. It just can't get out of its own way here with even with India saying they're not going to import Russian crude and Ukraine and Russia bombing each other's refineries. And I mean, it's just everybody's been saying there'd be oversupply of crude oil next year. And with the government shutdown, we'll see what happens there. But just if we get in a trade war with China and that it slows the economy, it's just more worries than optimism around crude oil prices right now.
There's too much peace in the Middle East.
Yeah, you've taken the geopolitical premium out of it.
Well, I just did it. All right, let's rock and roll. We can talk about this in the show. All right. Welcome to Wall Street Beats. I am Benjamin Brey, joined with two of my favorite gentlemen from the East Coast, Kevin Bakes Baker and Bob Morris. Let's continue with what I was just saying in the pre-show. Crude's looking like it's going to four handle. Bob, tell us, why. I actually was having a conversation yesterday with a lot of macro hedge fund managers that I'm getting positive in the longer term, and that one of the great Achilles heels of this market is oil. But right now, it does look like it's going to a four handle. Tell me why it's not, or tell me why it is.
I don't think it's going to a four handle. That's a long ways from where we are here, but we're under $60 a barrel. And I didn't think we'd get sustainably under $60 a barrel. But as I said pre-show, there's more worries than optimism around crude oil prices right now. And, earlier this morning, it popped a little bit just on the news that India would cease to import Russian crude oil. And you've got Russia and Ukraine bombing each other's refineries, which is impacting the product market. But despite all that, oil is now flat on the day, as I'm looking at it on the screen right here. And as Bakes pointed out, we've got peace in the Middle East. So you've taken a lot of the geopolitical premium out of the oil price. And despite what's going on between Russia and Ukraine, you're not able to get oil to poke its head above $60 a barrel. And if there is then peace between Russia and Ukraine, that's just going to unleash more crude oil from Russia that's being sanctioned right now to come into the market. And the worry is that we've got this government shutdown, which doesn't seem to be, big impact right now. But the longer it goes, the more likely it is to impact the U.S. economy. We'll see what happens there. But then you've also got to worry about a trade war with China and how that all gets resolved. And as that stands now, if we're going tit for tat on sanctions or tariffs, then that's only going to slow the global economy in the long run. Now, granted, I think near term there continue to be more worries than optimism around the oil prices. Long term, I'm still very positive on it, in that you're going to see growth in demand for crude oil, and in particular, growth in demand for natural gas, which we've talked about ad nauseum, with all the LNG export capacity being built out and with the AI data centers. So, right now it's a little bit, tricky. It's, like I said, it's hard to get in the very near term, get super bullish about crude oil prices. As I said, there's more worries than optimism. And that's why we've sort of stuck more to looking at pullbacks to buy the natural gas names, and in particular, Expand Energy and EQT, which have bounced around here, but are both up from what they were about 6 weeks ago. And we haven't gotten into winter yet, and we're waiting to see how that all plays out. But the important thing is we'll start to get earnings from the gas names next week. We have EQT, and then the following week we get all the other gas names, Expand Energy, Range, and Taro. And again, like I mentioned on Monday, I think you're going to see on average beats on the quarter, just as these efficiency gains continue to improve and play out here for all the oil and gas companies. So, right now, yeah, it's a little bit tricky, but I'm just holding tight here. And on any sharp pullback, as I've continued to mention the last few weeks, I'd be looking to buy more of the natural gas names, in particular, Expand Energy and EQT on any sharp pullback if we see that in those names. Probably next, I'm looking at the integrated oils, Exxon and Chevron, as far as buying into any of the more oil related names here as we keep an eye on this market. So that's sort of where we stand here. Long term, also what I've got in the background, which I continue to own, is the infrastructure names, which should continue to benefit in the long term from this whole AI infrastructure build out and natural gas demand. Although I'm not buying any of those names now, I own them. I'm holding on to them. But in particular, Williams, Kinder Morgan, Energy Transfer, and Enbridge are the names I own on the infrastructure side.
Yeah, it's funny. Bake said that too much peace in the Middle East. There's a theory going around, closed circles that Trump is trying to pressure the Chinese and the Indians not to buy Russian crude, right? And that a 40 handle oil could get that war in the Middle East, or sort of Middle East, the northern Middle East, done as well. You subscribe anything to that theory at all?
I mean, $40 oil is going to slow things down a lot. I mean, if oil pulls back to 40 and these stocks pull back sharply, you want to back up the
48.
truck.
It could be 48. I don't mean necessarily 40. I just mean it could be 48, 49, whatever.
Yeah, but I think the one thing too is with the peace in the Middle East, I think you see Trump having stronger relationships with a lot of the Middle East oil producers right now, just given what's played out here in the satisfaction with sort of how things have come to fruition here in building this peace agreement and trying to keep that in place throughout the Middle East. Behind the scenes is the administration trying to nudge these OPEC producers to keep putting a little bit more oil in the market to get energy prices down. I mean, the best thing that could happen for the Trump administration right now is to see even lower energy prices with what they're fighting on the government shutdown and with the Chinese trade tariffs. And, it's probably a little late for some of these elections coming up here in 3 weeks in some key spots. But still, as far as the Trump administration is concerned, they would like to see energy prices even lower. That would be a boon for them, and everything that they're trying to accomplish, everything they're trying to do. So, and we're building this, Qatar base in Idaho. I mean, things seem to be a lot more cozy with OPEC producers in the Trump administration than they've ever been. I don't know if there's anything going on behind the scenes or nudging or anything like that, but clearly from the Trump administration's perspective, lower is better. Are we going to see a four handle? I really don't think we're going to see a four handle. I think if you saw a four handle, you'd see all these U.S. producers really start to pull back the reins and slow down. They've already done so with the oil price at 60 to 70. You've seen the layoffs as some of these companies, the majors have announced 20% of their workforce and so forth, and everybody sort of pulled back on just maintaining or basically keeping production flat. So I think anything with a four handle will really slow things down, and then you'll see that bounce back pretty sharply when you really want to back up the truck if you see that. I don't think we'll see it, but that's the sort of scenario where it could get really cheap for the stocks if they pull back sharply. The fact is the stocks have held up, I think, relatively well compared to oil prices pulling back here below 60. And I think that reflects a longer term optimism in these names. If you had told me a month or 3 ago that oil was going to be 58.50 today, I would have said that all these E&P or energy names would be lower than they are today.
Have they reloaded the SPR at all?
They've continued to refill it. Yes, they've been very slowly refilling it. It doesn't get a lot of news headlines, but they have been refilling it. And I haven't heard any chatter about whether at these prices they accelerate that or not, but they have been refilling it. In the meantime, China's continuing to fill, as we've talked about before, their strategic reserves, which they'll probably continue to do throughout next year, which is sort of interesting that they've been aggressive in doing that. Are they thinking, ahead about something happening where they need to have a lot of oil in reserves for whatever may happen globally, Taiwan, whatever, I don't know. But, that's been one strength or underpin on oil is the fact that some of that demand out there has been just China refilling or filling their strategic reserves.
So I was doing a little historical work on oil yesterday because, as we see gold prices literally going I don't know how much more vertical gold can go. Bob, do you
I know every
remember
morning
when
I look at it and I'm like, it's up like another 1% again today. It's just insane how it continues to go up.
Bob, do you remember when we first started Wall Street Beats and I would come on here and be like, you don't own
Yeah.
enough gold? And everyone was like, who is this kid? Like
I know. I got
that
my
was $2,300 ago. It's crazy. That was 2024.
I know, and I thought
This move is insane.
I thought I was smart writing out of the money covered calls on my Newmont mining, and it just got called away. So
All the way. I know. I mean, so Jen, let's pull up this chart. The first pull up either one. All right, so let's look at this for a second. This is the 150-year gold to oil chart. All right.
Yeah.
So you see over time, there's a relationship, right? Because it's a primary input cost to dig gold out of the ground, and then after the 1971 depegging, basically we've had higher oscillations, right? Because the introduction of fiat money and all that, and they're both kind of buys and sells at the same time. This is what I think is crazy. This is M2 to gold and M2 to oil, and basically they've gone the opposite way. And then go to the next one, Jen. This is the gold to oil ratio, the black line, again, 150-year chart.
Holy cow.
This is the black line is the actual one. So we're above 70 barrels per ounce of gold. And you see over a long period of time, it stays in that 10 to 30 bucket. It oscillates, but we're up here. And the red line is the percentile of the 150-year look back. We're now sitting at the 100 percentile, gentlemen. The 100 percentile. So, we can sit here and have a conversation about how oil has no bid. Trump hates oil. But at the end of the day, 1 barrel of oil is about the equivalent of like $500,000 of work at $20 per hour. Which is about 5.8 million BTU per barrel of oil. And that's a huge arbitrage we're running. And at some point, I think that, the CapEx for gold is starting to rise at an increasing rate. And the CapEx for oil and gas is declining. And look, I love gold. Let's just get this out here. You guys all know I like gold. But I think society needs oil and gas more than it needs gold. And so I'm starting to think we're getting close to the turning point here, now at the 100-year percentile. I'm not saying, this is a grand call, but that's where my mind is starting to go, for whatever it's worth.
What's interesting is, and sometimes you look at contra indicators, is you've got a lot of big names out there in the last several weeks pounding the table on gold, saying you need to put 20% of your portfolio in gold.
And I hate that. I hate that.
I mean, Goldman upgraded Newmont Mining this week after it's been up, 100%, and they upgrade it to buy after it's doubled. And nobody's pounding the table on oil, which,
One. It's Bob, the day I join you and start getting on here, it's going to be like me and you and like 5 other people on Long Oil Island. But I'll tell you what, as a guy who is on Long Gold Island by himself with the other gold bugs who never leave, they're permanent residents of the island. It will be fun bull market, I think, at some point. You just gotta. It's hard when you can see a bull market coming, but you also know it's like we're still just a tiny bit early. That's always a tricky spot. And I think that, Bob, to give you credit, you've been pretty consistent on here, because since we started Wall Street Beats, oil has been not great in this ripping AI bull market, and you've been steady and said, hey, look, I'm going to own the names I know, and I'm going to collect some yield along the way, either dividends, the MLPs, or selling calls for things that are just going sideways. And I'll wait it out, and I'll have my day in the future.
And look, I've made a lot of money writing out of the money covered calls, a lot.
Option selling is a very popular, very profitable business most of the time.
Yeah, especially in energy with the vol and when it's not moving a lot.
Hey, look, I know a guy who makes a ton of money selling crypto and energy vol of stocks that kind of are sideways and, strategically doing it. But there's a lot of ways to skin a cat. Anyway,
Yeah, right.
Anything else on energy? Otherwise, I think we let Bakes take us where he wants to take us.
Bakes, it's yours.
All right, buddy.
You didn't teach you at the Colorado School of Mines to upgrade stocks after they quadrupled. That wasn't 101 in Colorado. No. Oh, all right. Sorry. I love my sell side brethren and analysts, but good God, come on, really?
But Newmont Mining's up 5-6 points since they upgraded it after it doubled, so it's still
But you know what? Newmont Mining is the gold stock in the S&P 500. So if you want to own gold, you pull that off the shelf, kind of like you pulled Schlumberger off in the old days, and you own oil service. And that's portfolio management 101, CYA 101, and it was ever thus. But all right, let's go to some things. And a couple things. I like Wall Street Beats more and more with every passing day because it makes me think. I thought all the charts, but then Ben comes up with a couple of new ones. I haven't seen that before. And I kind of had a sense that was what's going on, but the extreme really surprises me. So I love that. And because of Ben and Steve saying, hey, Bakes, how do you trade these? Let's face it, I don't want this to become the silver and uranium channel, but I'm right on silver and uranium, and I think I've said that. I'm also right on platinum, and I'm going, these I'm right, but these are extended. And so here's platinum, and what I've decided to do is have a sort of a corollary to my discipline is when things get really above my 10% per position ETF, I own the 10 best, I'm going to peel them back to 10. So I'm doing that today with platinum PLTM. It's taken out another new high. I think silver and platinum are outperforming gold by a little bit this year. I think. I don't really care. I just want to make money every year. So platinum, what I'm doing, and I'm going to be doing this with silver and uranium to an extent. When it gets above, gets to 13, 14%, I'm going to pull them back to 10. And then when they double, I'm going to pull half off the table, play with the house money for the rest of it, and watch silver go north of 50 like it already is. It was spot 53 today. Uranium stocks are going great, and spot uranium is 79.90, not even above 80 yet. When it takes out 106, that's going to go tackle 135, I believe, and you're going to see incredible moves in the uranium stocks. But for right now, thank you, Ben, and thank you, Steve, for kind of reining me in a little bit inadvertently, unintentionally. And I'm going to start taking these things down to 10%. Platinum, I'm up 47%, I think, when I looked this morning on this PLTM, which is the physical metal. And just, be smart about this. And frankly, I'm looking for my number 10 name. I go through, now it's 5,033. There were 2 added over the last 2 days. So the ETF proliferation continues. I'm now going to 5,033 ETFs. And, frankly, oil hasn't shown up yet. So I don't see anything in oil to do yet. Believe me, I'm going through them every single month at least. And when I see something going up, C&Q intrigues me. That's probably my number one with a bullet there. But so make a long story short, I'm going through all these ETFs. I don't have a 10th yet. Stay tuned, and I will. But that's what I'm doing with platinum. I've got 2 more things to talk about if we have time.
Keep going.
Okay. This is the SPY. And I'm just intrigued by this. You have this reversal day on Friday when Trump goes, I'm going to whack China again. And we're bouncing. But look at the volume. The volume on the China day is way above what's happening on the bounce. And it isn't definitive yet. I don't want to go too far with this. But the bounce is unconvincing at this point in time. It could change, and we could, rip again. But we took the hull took on a torpedo, and I don't know if it's old Ironsides yet. So we'll see how this goes. But I was curious to see this today. I always like to see what happens after in the ensuing trading days after a big event. And right now, I think that it's suspect of this S&P bounce. Could change. It isn't definitive, but it caught my attention.
Hey, Banks, when you look at the middle of your chart there, it looks like a similar situation to what was beginning there in the middle of the chart where it pulled back and then you finally got some big volume on an up day. So is that something you look for to stay constructive, is big volume on an up day? Is that what you're watching for?
Are you saying this right here? This big
Yes.
This is tariff day. Yeah,
Yes.
I pay attention to volume because those are people voting, or it's the algos that people code and write deciding with their feet, but it's still people. And so, yes, volume I pay a lot of attention to. Without a volume part of the chart, I'm kind of, I'm flying blind. So, yeah, that's a reversal back here, in the tantrum, the tariff tantrum. Yeah. And so I look at that. And then I look at these, I call them distribution days. The volume is picking up on the downside. Again, it isn't, we don't have violations of the moving, we're far away from the moving averages, so I'm not that concerned yet. And frankly, I don't hug the index, to put it mildly. I'm silver, uranium, platinum, cannabis, psychedelic drugs. I mean, I'm as far away from the S&P 500 as you can possibly get, because that's where the fun is, as Manfred Mann would say. So that's what I got there. I got one more. If you got time,
let's do it.
Okay, this, just so I cover all the waterfront, LVMH. I put in the note today. This looks like Lazarus to me, and I haven't looked at the short interest, but this is luxury, Louis Vuitton, LVMH. And that's a turnaround, or at least a potential turnaround. 120 to 140, that's a move. And I don't know what the hell they said. They didn't have earnings. I don't know what happened. But things at LVMH, I haven't looked at all the luxury names. I kind of did it late last night. But take a look at luxury by the Berna and other folks, Jeff, that look at luxury and retail. I'm intrigued by this.
I know. Let me stop you for a second. China has improved basically, and look, China's running a 10% budget deficit. You would hope when you run a goddamn 10% budget deficit that you get a little bit of a bump. Otherwise, you're in a real, up a paddle or up a creek without a paddle situation, which they could be. But I think there's some improvement there. And you know what else was pretty good that I actually personally own is Nestle, which is trades in Switzerland, and everyone knows Nestle. They actually are the owners of all the bottled water companies in America, and they have them all under different names like Poland Springs or Chippewa Falls or whatever. But up 12% today, boys. It's my new Bud. You guys remember the beginning of the year I started with Bud? I bought the Nestle recently. Kind of a similar down and to the right chart. I got a little 10%, 12% pop today. But the LVMH and Bud, pretty good for some big, beat up, quality names in Europe this morning and yesterday.
Yeah, and that's the reflex I had was, okay, luxury follows China. I didn't see anything today that China was remarkably better over the last 2 or 3 days. And 120 to 140 is a hell of a move on above average volume. And it surprised me. So I put it out there for our subscribers and for Berna and Jeff and anybody who else, because, luxury's been dead for a long time. I don't know what it means. I don't mean if there's a China deal coming. I don't know what's going on. But I know that's a chart that's intriguing. It ought to pull back. If it doesn't on low volume, I get even more interested. But LVMH, there's positive change going on, which is what I look for all the time.
Yeah, I mean, stock's up 30% since the summer. That's a fantastic move. Fantastic move.
Yeah. So,
all right. Well, Anything else? Otherwise, I think we'll call it. You know, we started a little late. We usually go ahead. Sorry.
No, I try to do things in threes. You know, Stooges, comedic timing, Holy Trinity. You know, so it's 3 charts a day for me. That's what I do. So rock on.
Great. 3 amigos here are out. We're gonna call it on time for once. I tend to be the moderator that drags over the most, and so today we're running a tight ship. We will get back to you tomorrow. Enjoy your night or your day, and happy trading into OPEX tomorrow. I am Ben Brey. That is Kevin Bakes Baker, Bob Morris. Come check us out at wallstreetbeats.com and passes.com/wallstreetbeats. Thank you very much, guys.
Keep smiling. Thank you all. Thank you.